नमस्ते दोस्तों, आपका वैल्यू एजुकेटर चैनल में स्वागत है, जहां आप सीखते हो स्टॉक मार्केट में निवेश करके आप कैसे पैसे बना सकते हो। तो ये जो वीडियो होगा वो एक डिस्कशन सेशन होगा मिस्टर विशाल भार्गवा जी के साथ। तो उनको काफी एक्सपीरियंस है इन रियल एस्टेट सेक्टर। वो काफी सालों से ये जो स्पेसिफिक सेक्टर है इसके बारे में काफी उन्होंने रिसर्च किया है। तो ये वीडियो में हम पहले जो मुंबई माइक्रो मार्केट है रिलेटेड टू रियल एस्टेट, इसके रिलेटेड काफी डिटेल में डिस्कशन करेंगे। और विशाल भार्गवा जी का आप यदि पास देखोगे तो उन्होंने CLSA इंडिया जैसे जो फॉर्म से उसमें काम किया है, इसके अलावा इकोनॉमिक टाइम्स में भी काम किया है। तो पहले हम एक जो विशाल भार्गव जी एक प्रेजेंटेशन प्रेजेंट करेंगे अबाउट मुंबई रियल एस्टेट मार्केट या जो माइक्रो मार्केट है ये। इसमें वो अलग अलग फैक्टर्स कंसिडर करेंगे, जैसे कि रियल एस्टेट मार्केट कोविड के पहले कैसा था, कोविड में एक्चुअल में क्या हुआ, एंड करंटली RBI ने जो रेट हाइक किया है, एक्चुअल में 2 रेट हाइक हुआ है अभी फिलहाल में, 40 बेसिस पॉइंट और 50 बेसिस पॉइंट का। तो इसका क्या इम्पैक्ट हो सकता है रियल एस्टेट सेक्टर में, इसके बारे में हम ये वीडियो में काफी डिटेल में जानेंगे। और इसके बाद में Q&A सेशन होगा, उसमें मैंने काफी अलग अलग क्वेश्चंस पूछे हैं, हाउ टू डू द स्कटलबट, या इसके अलावा कोई भी एक डेवलपर को चूज करते समय हमें क्या क्या एक्चुअल में ऑन ग्राउंड चीजें देखनी चाहिए, ऐसे अलग अलग काफी डिटेल में मैंने डिस्कशन किया है। तो मेक श्योर ये जो वीडियो है आप कंप्लीट देखिए, एंड आपके कुछ क्वेश्चंस रहेंगे तो आप जरूर मुझे नीचे कमेंट में लिख के बताइए।
Thank you, Vishal. Thank you for the introduction. I'll take a short 10-minute presentation regarding the structure of Mumbai real estate as it has been, what has happened in the last 5 years, what has happened in the last 1 year, and then what is likely to happen over the next 5 years. So before we get into Mumbai real estate, let me just give a sense as to why is Mumbai real estate so important. Like with every market of housing across the globe, the biggest component that drives any economy that commands household wealth, that is dominated by the real estate sector. So at a global level, housing is valued at $170 trillion. The top two markets in this are the US and China, both over $30 trillion. Markets like United Kingdom and Canada, they have ranged anywhere between $8 to $10 trillion. So in terms of its significance in comparison to the equities market, it is almost 2x of the equities global value. Breaking it down from country as to the city level, unexpectedly the highest valued city in terms of housing is California. That's over $7 trillion, more than 2x the GDP of the city. Mumbai is $600 billion. So it is the biggest housing market in India in supply and demand and value. And it's about 2.5 times the GDP of the city. So to understand Indian real estate, the significance of Mumbai real estate cannot be overstated. So the simple question that many people often ask about Mumbai is that why are house prices so high in Mumbai? It's a simple question, but it has complex answers. The first component is that given the nature of the city, its geography, it is always saddled with land scarcity. There is just not enough land available. Even the land that exists, it is to a large extent encroached. And one of the big components of the encroachment are slums. 35 crore square feet of land in Mumbai is encroached by slums. That's almost 1/4 the habitable land that exists in Mumbai today. While this amount of land is encroached, please keep in mind that almost 50% of the population of Mumbai does stay in slums. Besides land, the other component is that over the last 15 years, we have seen some very aggressive underwriting of projects, uh, which after the initial aggression went into complete paranoia that raised the expectations of landowners. So while the market may keep going up and down, landowners have not revised their expectations proportionately. The second part is a lesser known aspect, that is government levies. Now, levies, taxes, FSI are a very critical component in the cost structure of for developers. Uh, FSI, for the sake of simplification, is the amount of area a developer can build based on the certain size of a land. So, if you have a 1 acre uh, plot, there are restrictions as to how much you can build on that plot. That restriction comes in through various regulations at the municipal as well as non-municipal level. So this component uh, for the last 5 years has been 20 to 40% of the total costs for a developer. That has been one of the backbreaking components for a developer in undertaking projects, and if he has undertaken it, on the viability of the projects. The third component is the cost of capital. Builders, for a variety of reasons, get debt at expensive levels. In the boom era, the debt component was lesser because many things were done informally or they were done via customer advances. Through the regulation of RERA, which came in 5 years ago, builders need to take all necessary approvals prior to starting sale. So you cannot do customer advances uh, like in the good old days. Secondly, even buyers, after the experiences heard by many of many stalled projects, they prefer to buy projects when they are at a later stage. That means the funding for a developer has risen meaningfully because most of the time the sales happen at the latter end of the project. So what is RERA? Uh, it's been a path-breaking legislation. It's still getting tested. I do not want to say that it has solved it has cured the sector of its ills, but to a large extent, it has managed to reform the sector, reform the practices. So, what was life before ERA? It was blatantly anti-consumer. Developer had very low capital allocation to do. He used to launch sales at a very advanced stage by taking money from the customer. Uh, the threshold for becoming a developer was negligible. There was no serious penalty or regulation uh, that developers had to face in case of delay of a project as well as in quality. Misappropriation of funds was common. I took money for a certain project, I deployed it for another project. I used that money to buy land elsewhere. That's very common. And it took 15 months for the construction of the first lab uh, from the launch of a project. That's a very long period from the launch of a project till the first lab. There was complete financial mismanagement. Now, life after ERA, it has moved to becoming pro-consumer. You need to allocate a sound amount of capital before a project gets approvals and it can start getting sold. The barriers to entry have increased meaningfully. Uh, no longer can uh, a two-time contractor become a builder in his micro market because he knows few things about the local market. There is responsibility towards timely completion of quality. The completion part has been mitigated by developers by giving very long dates for completion. So it's not uncommon today to see projects which have completion dates of 2028, 2029. But I suspect that this part will also get addressed over a period of time, both by regulation as well as by customer behavior, who then prefer to uh, do deals at the latter end of a project. Collections that a developer gets in a project have to be deployed in the project to a large extent. So misappropriation will not be as rampant. Again, uh, there needs to be greater scrutiny in this regard, but it's been a big step forward. And the 15 months that it took for construction, the first slab from the launch of the project has now become 6 months. That is uh, a meaningful change that has happened in developer behavior. So we spoke about why it's expensive. Does affordability hold the test in Mumbai? So Mumbai is a market where average home prices are between 1.5 to 2 crore rupees. So a home purchase typically needs an EMI of at least 1 lakh rupees per month. So how many people in Mumbai at that level really make that kind of money to do that sort of EMI? The first home buyer. So there are about 20,000 households that do a rental registration of 50,000 rupees per month. So there are 20,000 households that have done deals where rents have exceeded 50,000 rupees per month. That does not mean that only 20,000 people are your first time home buyer, because many times people do rental deals for 2 years, 3 years. Often there is a component which is not uh, only done in official purposes, so on and so forth. But even keeping all those adjustments in place, the first home buyer market at that price point that we're talking 1.5 to 2 crore is about 50,000 households. Now, the inventory of Mumbai has ranged at 100,000 odd for several years. Uh, Much of it got absorbed in the 2020-2021 period, but a lot of launches have come in which have kept that number at similar levels again. So, with the first home buyer market being a very narrow one, there is a big importance on replacement demand. That replacement demand is where a lot of activity is happening. Uh, these numbers that I mentioned in terms of households, when we look at the home buyer market, uh, annually we see about 70 to 80,000 units being registered in Mumbai. Two-thirds of them are resale. So the primary market is fairly shallow. It's 20,000, 25,000 units over the last few years. And the average transaction size, that has now come to about 1.5 crores. To a good extent, this change has happened because developers have tried to make homes at levels below 1.5 crores in the outskirts or in the far-flung suburbs of Bombay. Uh, that has happened to a great extent by uh, keeping costs, prices low, as well as the shrinking of homes. Homes sizes have shrunk by about 25% over the last 10 years. So it's a combination of smaller homes as well as cost aggression that has made more people come into the first home buyer market. The prices which are the 1.2, 1.25, 1.35 crore market, where the volumes have dominated in Mumbai. So some bit of history regarding the last 5 years, last 7 years. 2015 to 2020, it was a very lax market. Supply kept hitting the market despite low absorption. A good chunk of that was being aided by subvention schemes. Uh, what are subvention schemes? Subvention schemes are basically where the developer tells the home buyer that I will bear the pre-EMI till possession. So a person who's staying on rent and is then buying a house, he does not have the responsibility of paying his monthly rent as well as paying the EMI till completion of the project. That worked sharply for developers. Later on, RBI curtailed subvention schemes, uh, due to which developers have had to approach uh, these payment plans in a very different way. There was fairly poor market understanding and product development. Uh, Developers were building products for a market and a market size that did not exist. And lastly, builders held on to price levels that were not realistic. This was part of a culture that had been deep rooted, where developers basked in the glory of low supply and home buyers stretched themselves further and further to acquire an apartment. COVID-19 turned the sector on its head. after the initial panic from developers, all the stakeholders went all in to get demand. Builders cut rates, government cut stamp duty, lenders provided good deals, and buyers who initially were reluctant in doing deals recognized that the impact of COVID-19 was not as grave as they estimated. Uh, the push in equity markets and the rush in startup sectors, valuations and liquidity, that pushed demand. Uh, Thereafter, momentum and sales aggression has ensured that demand has remained steady, even if it is not as strong as it was in those 6 to 8 months when that stamp duty waiver was given by the government. So 2021 is where the stage is set for what will happen in the next 3 to 4 years. This is the perhaps the most decisive year where the government has given SOPs and benefits that will have implications for the next 3 years. What did government do? After the complaints and the plea by developers where FSI cost was too high uh, for developers, the government slashed the FSI cost for builders until December 31st. That meant uh, any and every developer rushed to clear his files until then because the benefits existed till then. Redevelopment activity hit a historic high. We in many micro markets we have seen more redevelopment approvals in 2021 than we have seen in the last 10 years. That tells you the scale of activity that has happened. For a number of years, the redevelopment which had been stalled, that all came together in 2021. Builders rushed, municipal corporation earned good amount of money, with the revenues from developers rising 4 to 5x of a normal year. This was just in terms of the FSI rationalization by the municipal corporation. Over and above that, there have been measures to revive stalled projects. What has that done? That has led to an unprecedented amount of supply that is hitting and about to hit the system in 2022, 23, and 24. The approved supply by the municipal corporation alone is 15 crore square feet. What is 15 crore square feet? That is 4x of the sales that were done in 2021. Please keep in mind, this approved supply is only by the municipal corporation. There are other authorizations by other departments that boost the supply to even higher levels, be it MARDA or SRA. My guesstimate on this would be that the approved supply across the board would be as much as 25 crore square feet. Will all this supply hit at one time? No. But even if it hits over a 2 to 3 year period, we will be faced with a supply that Mumbai has not seen, and its prime markets are unlikely to ever see in the future also. What is the other byproduct that's happened in this is that the small and mid-sized developers who were very demoralized over the last 5 years, they saw an opportunity returning back. So they are the ones that have played a key role in redevelopment approvals. Redevelopment is about 2/3 of the Mumbai market, and small and mid-sized developers have returned with a ferocity that was unexpected by most market commentators. Even slum redevelopment that had been stalled for a variety of issues, that has seen some degree of recovery due to the intervention of the housing minister. So all in all, the next 3 years is going to be a test case for Mumbai developers as to how they handle the market amid so much supply. What's the outlook in terms of specifics? 2020, 2021, after the COVID pandemic panic, a lot of factors came together for the industry. There was a stamp duty cut, builders cut rates, home loan rates were attractive, a lot of pent up demand got absorbed. Now there's been an unraveling of those factors. Stamp duty levels have been raised. The 2% levels that existed during the environment of till December 31st, 2020, that is now 6%. Home loan rates that were very attractive, they started rising. Input costs have also risen quite a bit. So please keep in mind that raw material cost plays a marginal role in the cost structure of a Mumbai real estate project. And there will be a supply glut. So we will see uh, an unfavorable environment take place at a micro level for real estate. Uh, what do all these factors tantamount to? It's inevitable that a price war is going to happen. This is an industry which is very fragmented. Uh, Cartelization is unlikely. Each developer, mid-size, small-size developer has his own battles to fight. Uh, it's a matter of time before a price war emanates in the industry. I don't expect the price war to be fought under public glare. Uh, it will not be on billboards. It will not be announced on billboards that we are all cutting our rates, but it will be happen under the radar, given the uh, nature of real estate development that happens, wherein no one will want to advertise price cuts, but they will want to ensure that the velocity remains high, and that will happen through sales aggression. For the broader industry, volumes will remain steady because a lucrative cost structure has come into play because of the FSI premium cut. So, because of that, developers will have leeway to be more aggressive on pricing and getting demand. At the individual level, projects may still struggle uh, because uh, supply creates its own demand and supply is scattered. So while the overall volumes may still look steady and strong, at the individual project level is where challenges will happen because of the intense competition. Uh, I expect most of the developers to be nimble in this regard. I've been encouraged by the behavior of most of them uh, into recognizing that the old ways of doing business will not suffice. Uh, who will be the big gainers? The big gainers will be credible developers and micro market specialists. Uh, they will be the ones who will lead the charge. They'll be able to garner a modest to moderate level of premium from home buyers for the quality as well as the delivery assurance. Uh, the trend of joint ventures between landowners and credible builders will continue. In this regard, there are two key players who hold the keys to land parcels, that is DB Realty and Hubtown, which was earlier called Akriti City. Uh, Both of them have, I appreciate that the view of many market commentators that both of them have reputational issues, but in a way that feeds the space for joint ventures to be there, where they will provide the land and credible developers like Godrej, Prestige, Lodha will act as partners to them. Uh, who are the players to watch out for? At the mid level, if the two players I'm watching out for are Rustomchi and Adani Realty, both very nimble, uh, both very keen to grow, both have aggression which is kept in line with the degree of reality at the ground level. Uh, there are several others that have aggression, but that aggression appears to be largely misplaced in terms of their actual prices that they can command from the home buyer. So all in all, the next 3 years, good steady volumes across at the industry level, but I expect major challenges at the individual project level given the competition that is likely to happen. So that's all from my side.
Uh, Thank you very much, sir, for that insightful presentation. So I have certain questions in general real estate market, including what is happening now and with related to some of the historical events which probably has happened. So firstly, I would like to understand that you had mentioned about this 20 to 40% the amount is taken by the government or the MCGM in Mumbai market. So what are the trends in other markets, if you can share some insights, or this due to this, like the prices are actually artificially hiked, and that's why there is a pressure on a sales or overall volumes or total rates of the land, the houses.
So the government has not played a role in making sure that homes have remained affordable. They have kept costs high. Uh, I appreciate the point of view of many uh, honest bureaucrats when they say uh, that if I reduce my share, does not mean it will gain the home buyer. The developer will still keep the prices high.
Right.
The developer will make supernormal profits. I'm just saying that give me my cut in that. I think that's a valid point of view. I don't want to make developers sound as the most honorable businessmen. But I think we have seen where a stage where governments have gone a bit too much on the extreme in terms of extracting their share from developers, be it at the FSI sales as well as in terms of levies like stamp duty or GST. At that sort of structure, that hurts demand. Because these GST and stamp duty are eventually costs that have to be borne by the home buyer, which hurt velocity of a project, which hurt even the sales trajectory for a market. So other markets are not as potent in their demands like the BMC, but BMC's challenge is now that their administration depends heavily on the housing sector for its budget.
Right.
There 2/3 of their budget gets consumed just in salaries. So to do that, they also don't have that much flexibility now to cut rates for a sustained period of time. So the waiver that came till December 31st, 2021, can it continue for a long period of time? I suspect not.
Right. 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 So related question to this, with respect to recent inflation, which is ongoing. So the player who have his own land parcel in Mumbai, which probably like in a good location, goes beyond 25,000 to 30,000 rupees per square foot, and in general the raw material hikes are about 500 to 600 rupees per square feet, if I'm my understanding is right. So how does it actually affect his margins or his like the pricing point, and are there any price hikes which already started in Mumbai real estate market? Is there any what you can say? Is there any gap or opportunity to increase the price which are already hiked due to various reasons?
So yes, input costs, so raw material costs, means the cost of construction in a real estate project is anywhere between 2 to 3,000 rupees per square feet. Now, in that, the overall prices rise 300, 400, 500 rupees. In my view, that does not move the needle too much. At the same time, developers have to or are in the zone currently wherein they believe that this momentum which is there will continue and the price hike will get absorbed. I think most of them have realized it is not. You do the hike, but then behind closed doors, you give the discount and come back to the same price. So the advertised price may look higher. The realized price will eventually be very close to the old price.
Correct.
And in my view, that's a healthy trend because if you're reacting to the market, it shows that at least you're able to adjust to the market and be nimble as to what the home buyer is willing to offer.
Right. So if you will just compare the markets of Mumbai with respect to other markets, say Bangalore market or the some other cities like Ahmedabad market. So more or less the cost of building is generally similar. Mumbai may have some extra premium attached to it, but definitely the raw material prices are equal to all of the builders, while the rates in Mumbai is too much like higher compared to other markets where I think Ahmedabad and Bangalore have the range of about 4,500 to 5,000 maximum, while in Mumbai it starts from like about 15,000 to like more than 30-40,000 per square feet. So do you think there will be like more pressure in other cities compared to Mumbai due to raw material hikes?
So yes, other cities will face an issue because their input costs play a critical component in the viability of the project.
Right.
Even outside Mumbai, right next to Mumbai, is part of Mumbai metropolitan region, where affordable housing has played a key role in the volumes. They will get hurt because
Okay.
they work on wafer thin margin, but they work on high volumes. There, your margin itself is often 1,000 rupees, 1,500 rupees.
Right.
So there the market will get impacted disproportionately if we see this current trend of hikes in raw material prices. Those are the ones that will get badly hurt. But for a market like Mumbai city, it has minimal impact. It impacts affordable housing as well as most of the other low cost markets of India.
Right. Right. So like in connected the question to that, in Mumbai already prices are very high, so it leaves a very small what you can say gap to increase the prices from there on. If you compare that with the other markets where the prices are probably a bit lower, so is there a chance to other players to increase the prices as and when the raw material prices increases and keep the margins with respect to the developers which are in Mumbai where the prices are already high and it becomes difficult to pass on the raw material prices?
So I think the only developers who can the two types of developers that can pass on the price hike. One is at the extreme bottom end, affordable housing guys who need to do it for a force of compulsion. Otherwise, the
Right.
projects become unviable almost.
Right.
And the other is the other extreme, where you do these top end luxury projects, where your customer base is such that you are offering a product that is unmatched. You have the ability to change prices there, and it gets absorbed. It's that
Understood.
mid-level rung, which is a key component of the market size, where the problem is the most. Where you're getting the first time home buyer, his budget will be a certain amount. He's already stretching hard. Uh, you add it tougher for him, he'll probably not make it.
Right.
So yeah, so I think the only two types of developers who can see it through will be the ones that are into extremes. I think a developer like Ajmera Realty in one of his projects can afford to do that and get away with it. Uh, I see uh, select other unlisted developers who have that potential to do it, but broadly, most developers who are fighting at that mid-level rung, they will struggle to pass on the hike or see it get absorbed.
So moving on to the next question. So already the raw material prices are hiked a lot, which were not expected, and then there has been an export duty for the steel, which after that it is expected. I was listening to different con calls of different developers, including Lodha and then the Bangalore-based developers. So they are like basically saying that already they are seeing the raw material prices are already coming down a bit, and probably next 6-7 months might be bit better. So, what is your understanding on a ground level? Is that already started coming into the prices, or the trend is actually going down on our raw material side prices? And another question related to this is what actually has happened after the rate hike by the RBI by the 40 basis point, which actually really, at least the stock market has taken very negatively, the stocks which are listed into real estate segment. So what is your understanding, or it will take some time to get a clear picture?
So answer the second question first. So on interest rate hike, uh, means stock market is very forward looking. I don't think it's going to have an immediate impact. It hurts sentiment, no doubt. Uh, the key question for home buyer in this regard is that how much does that add to his EMI? And if the trend is upwards only,
Yes.
so unless there are sharp hikes that keep continuing, then there'll be a challenge again, as I said, at the affordable housing segment. Uh, at the mid-level segment, it will take longer to show. But just to tell your audiences as to how the disparity often is, that in that affordable housing segment, often deals don't happen because of something as uh, you know as trivial as the processing fee of a bank loan.
Right. Right.
Processing fee is too high. I can't do the deal. I'm using the word affordable housing in a broad way. Affordable housing means many different things, and it's a abused term, admittedly, but I'm using it in a broad way. But that is the mind of a home buyer at the base level of affordable housing project. For a mid-level person that is there, he will be able to hold on if the offering remains uh, uh, still within reach and the hike is not disproportionate in terms of interest rates. So regarding your first question on input costs, I've noticed that at least the panic has stopped
Okay.
among developers. In between, I think there was this cacophony among developers, especially Mumbai developers, which I found surprising that they shouted so much on input costs uh, as if a hike of 800,000 rupees made their entire project unviable. That was mainly narrative setting. Uh, means I don't think any serious commentator in real estate takes their uh, claims of unviability because of input cost hike seriously. That's not that's not true at all. Uh, when all of them come together, the challenge for developers is that not to look at input costs in isolation. Input cost hike has come with a stamp duty hike, with an interest rate hike, with a lot of supply, demand softening because the pent up demand has got absorbed to a good extent. So yeah, uh, don't believe the spin of input costs hurting projects, but it's true that when all of these things have come together, it has hurt the economic condition for developers and projects.
So you have explained about the supply side, what has happened during the pandemic because of the cuts into the FSI rates by the MCGM and various authorities. So let's come to the demand side now. So at the same time during pandemic, everyone was working from home, and there has been a good attrition which has started into IT industry specifically. And I was just tracking the employee cost and the hikes which particular employee has got during this period. It has been a tremendous hike, and it is believed that all whatever extra hike which they are getting, it probably is coming into a real estate sector because recently stock market was also very volatile. So compared to that, real estate sector is at least buying a home is much safer compared to investing into stock market. So what is your understanding about this demand which is coming from the IT sector, from the IT employees? And I was listening to the interview by Deepak Parekh. So he also mentioned, I think in last con call or about a couple of months back, that they have disbursed the highest loans related to real estate. So what is your understanding, sir, related to the demand side?
So on the demand side, so see on the IT side, if you ask me, I don't have much of a clue because Mumbai market is not dominated to a large extent by IT employees who are buying apartments here. What has happened on the second point that you mentioned regarding the stock market, that has played itself out in 2020-21, where a lot of luxury homes were purchased on the back of soaring equity and startup valuations. So luxury has gained disproportionately because of the rush that we have seen in the equity and startup space. Uh, uh, so yes, whether these things will continue, not continue, is tough to say. But I will say this that at that point when a lot of these sales happened, uh, developers gave offers that I think were probably the best offers that they would have given in a long time. So will those offers return? I don't expect them to return soon. So the trend line that we saw of 2021, I don't think that will sustain. Uh, that was a phase where everybody made things happen. Now I suspect we will still come to the phase where a large number of developers will wait for things to happen.
Right. Just for the understanding purpose, I would like to understand: is there any correlation between the stock market versus the real estate as an asset class? I'm asking. So if the stock market crashes, so does that demand shift to the real estate, or is it not correlated as a asset class?
I don't think so. I don't think so. That may have been true at a time when real estate was viewed as an investment opportunity, where
Okay.
people thought that if I'm not putting money in equity market, let me put money in real estate. That's a safer investment. But I think no one today buys an apartment in Mumbai for investment.
Uh, I think today only I saw your tweet. I think that was by Lodha, that you have seen the cryptos and you have seen the volatility in stock market. So it has been a probably new campaign which the developer has started for on a advertising point of view.
So see, that is land. So again, I hold no brief for Abhinandan Lodha. He has his strategy. Uh, see if it works and works for him to judge. But his offering is not towards Mumbai and it's not towards apartment. It
Right.
is toward land and its outskirts,
Correct.
where there is a temptation among many people that if you give them a low ticket size, I want exposure to land which faces a sea or a river, uh, or what masquerade as river townships or beach townships, so on and so forth. So yeah, investment in Mumbai, even I think there'll be no developer who will even tell you that you should buy for investment. I masquerade and pose as a buyer in many projects when I go. And I often tell people when they ask me, sir, the purpose is end use for investment. And when I tick on investment and when they read it, I can see that they themselves are shocked that somebody is
Right.
investment. So that is the mind of a developer and a sales staff today.
So most of the volume is a actual real volume, which is the home buyer. Okay. The next question is, I mean, I would like to understand how the redevelopment contract works, may it be the slum redevelopment side, and as well as the existing building, they demolish it and then they redevelop it with the bigger probably flat sizes and higher number of floors. So here, like, who is at the advantage? The developer is definitely, I think he will be at the advantage, but how actually this thing works, and what is your experience over the period of time? Is this like started newly, specifically non-slum redevelopment? I'm asking. So what is your general understanding about this side?
So see, there are many types of redevelopment. At one end is society redevelopment, where standalone building is there, uh, builder demolishes it and builds a bigger building in simple terms. It's a 3-floor building. You come and build it as a 7 or 8-floor building, uh, depending on the norms that are prevalent.
Right.
At the other extreme is the slum redevelopment. Uh, that has the highest FSI.
All right.
Because there is an incentive for redevelopment of slums given the sheer density and volume. Different redevelopment follow different regulations, 33(7), 33(9), etc. What works for most developers is branded developers will not undertake slum redevelopment on their own.
Okay.
They will want a partner who will handle that. So if there is Oberoi 360 West, he did not handle that himself. There was a partner who handled the slum clearance and redevelopment. It's a specialized skill set, and branded developers, while many of them may have the skill set, I suspect they don't want to give the perception that they have that skill set of dealing with slum dwellers and getting there.
Understood.
The other players over that are players like Omkar, who had cultivated a very strong brand equity among slum dwellers at one point of time. Society redevelopment is an easier ball game where a small and mid-sized developer can see it through. Who's at an advantage? In a simple way, all of them could have gained. Okay, the terms are simple from a developer that if you own an apartment in ABC building, you have 1,000 square feet apartment. I will give you 30%, 35% greater area than your current apartment. I will also give you transit rent for the time that you're not staying over here and you're going to stay for 3 years, not in your building when it's getting constructed, and the corpus, so on and so forth. It works for everybody. The builder gets land, the homeowner gets a bigger apartment, and the home buyer comes and buys the sale apartments that the developer will build. So the 20 apartments in a building, 10 apartments will be given to the old owners, 10 will be sold in the open market. Builder makes his money from those 10 markets and the 10 sales in the open market. Unfortunately, what has happened is that developers embarked on too many projects. Too many of them got stalled. But while the project was stalled, because there was such a rush among so many developers for a particular piece of land, the expectation of landowners rose substantially.
Oh. Okay.
And they have not come down meaningfully. Because many of them work with the assumption I was getting 50% extra space in 2013. Now 10 years later, how can you come and say I'm getting only 35%? But the ground is shifted.
Right.
And that change has not happened partly because of society developers and their own mindset, and also because developers have just not put their feet off the accelerator. You see a plot, because it's a fragmented industry, there will be enough people that will go and bid for a plot of land and raise the expectations of landowners.
Correct.
The same thing has happened with slum redevelopment.
Oh, okay.
We've raised the expectations of slum dwellers in such a way, not just developers, and this government has played an extraordinarily negative role in boosting the expectations of slum dwellers. Every few years, you raise the expectation of a slum dweller that you get a bigger apartment free. Until the last number was 269, now it's become 300 square feet. Because of that, slum dwellers often keep thinking, I'll get more later. Or even if a deal has happened, they say, now the rule has changed. Give me more based on the new norms. It just complicates matters. Even if those rules are not notified, but even comments by government officials or politicians, that skews the environment. Which is why redevelopment in slums has struggled for so long. It's a messy area which big builders don't want to touch. So to answer the question, it's still nobody's balance. A developer is a developer in a redevelopment. Just the advantage over there is that there's a lower capital involvement there. But that ensures that mid-sized and small developers step in, thereby leading to fragmentation of the industry and leading to competition among too many developers. Because when the barriers to entry are reduced because of lower capital, everybody enters.
Exactly.
So and the second part is that then flat owners, they start thinking like landowners and they start thinking partly as developers. Developer itna paisa bana raha hai in this, they will do their own study. कि अरे इतना FSI potential है, saleable ये है, इतना calculation per square feet rate, and then they'll go to the developer. You will make so much money. Now from that I want this much. Okay. Now I think most of the proposals I've seen by society owners, they are very flawed. The calculation is flawed. And I can understand why developers, when they see that plan, they refuse. So there's no hard and fast rule as to what works, what doesn't work.
Okay.
Terms need to be favorable in any structure, be it a redevelopment project or be it when you're doing a joint venture or a joint development. There is no approach that works for everybody.
Understood. So continuing this with let's discuss about joint ventures and joint developments where the society is not demolished and created, while instead of owning a land, you partner it with the land owner and then develop it. Probably the good example can be Untitled Realty, where they have done the partnerships outside of the Mumbai main city in the region of Naigaon and all. So, how you think about this? What is your understanding on this side? Are there projects which are going on in Mumbai with joint developments, or the trend is shifting more outskirts of Mumbai? What is your understanding on JD and JBs?
So Mumbai is dominated with JD and JB for a simple reason that if you want to do an outright land purchase, the capital cost is too much.
Right.
And there's also not that much availability. So the people who have the land are the ones who have the historical land, and they keep building on it. They have bought land historically, and they're continuously building on it. Okay. So by outright, an example would be like say a Hira and Dani developers in Mumbai, or if you look at DLF in Gurgaon, land bought many years ago, you're developing on that. Those are the guys who did outright, but they did outright then. Today, it's very tough to do an outright deal. It needs a lot of capital with a fast meter. So people prefer doing a joint venture or joint development. Now, joint venture and joint development are used interchangeably, but they mean different things. But the framework is something that gets tested across all of them. There are models where a developer will tell a person that let's do a deal, I will give you, they will do area sharing. If you are building 1 million square feet, you own 200,000 square feet for 20%. Then you will do maybe sales sharing, revenue sharing. Whatever money that comes in, certain percentage goes to the landowner. Then you do profit sharing,
Right.
which is based on after the sales, all the costs come through, when the profit finally comes, that is shared. And there are models like DM, which is almost like being a contractor, where the guy
Right.
owns everything. I just develop it and sell and get out of the way.
Right.
So again, no hard and fast rule what works. Every developer and every landowner has to work according to what they think works for the project. You give the example of Suntech. Now, Suntech is an interesting company, and its promoter is a fascinating individual. I think he's one of the few guys who started with super luxury and has then gone into affordable.
Right. Kamal Khetan.
And I must concede that landowners, he's managed to create a reasonable amount of brand equity among landowners to partner with him
Right.
at big scale. He targets geographies outside Mumbai, where he has a vast expanse, 40 acres, 50 acres, that scale. In Mumbai, the activity has now become restricted. But the model that he follows, it works to a good extent with landowners if you have created something meaningful. So a player like Godrej, they may want to do outright outside Mumbai. Okay. In Mumbai, it's unlikely that they will undertake on too many outright purchases with the capital cost involved. They would prefer to do a joint development, as they've done in one of the recent launches. The land is not with them. They develop, they sell, construct, and sell. So no hard and fast rule. What works for the project, what works for landowners, I think they're realizing it's better to go for revenue sharing than profit sharing. Profit sharing has too many variables, and area sharing has its risk that if I give you the area, the landowner still has to sell it.
Right.
Here, the developer only sells it, but he just gives you the share. That is where I think majority of the activity is happening.
Correct. Now I have one specific question to one of the developer, which I am also keenly following. A small one, which is the Ajmera Realty. I have visited their project at Wadala, the Ajmera Island, and the 3 buildings which they have constructed, I think in last about 7-8 years, and where they have total land parcel of about 100 acres, and out of that probably they have constructed that 33 acres of garden, and probably 30 acres is already done with the Bhakti Park and the newer projects. So I think about at least 15-20 acres is remaining with them. And now recently they have announced about this Manhattan project. And there has been a demerger which is going on. From that entity, they will be coming up with the commercial
joint development project. I think it is not actually announced yet, but management was giving some insights about that. It may happen in future once the demerger is approved. So I would like to understand your understanding that, like, the player who have some land parcel in Mumbai, probably about 15 acres at Wadala and about 65 acres at Kanjurmarg, which is again under dispute, and plus some other, I think, land parcel he have in Bhandup and some other regions. He is developing one project in Malad, I think, Ajmera Aram, and one at Kalyan. So we'll discuss about Kalyan micro market also. They're coming up with the Kalyan one project. So do you have any insight? I would like to understand what has been the progress in a longer time frame, from, because you are definitely following the market from long period of time. So this is definitely a very small player, at least on a stock market point of view, on the market cap, and plus the debt, if you add, it is about 1700-1800 enterprise value, kind of a player. But how is the history of them and where they have reached till now? I personally think they have covered a long way. Just wanted to understand your thoughts, if you're comfortable.
So Ajmera Realty. I think the best way to look at Ajmera is to stand right at the entrance of their Vadala project. If you stand at the entrance of their the launch that you mentioned, the new project, Manhattan.
Yeah.
From there, you get a 180-degree view of the buildings that they have done. And when you take a look at the buildings from left to right, you will see how this developer has evolved. The earlier buildings were just shabby.
Right.
Keep in mind, these are buildings that are 20 years old.
Right. Bhakti Park, correct.
They're 50 years old. Then as you go further towards the right, you see that there's an improvement. And now when you see the last three towers in particular, you see the transformation.
Right.
This land parcel has had its own journey. What, about close to 40 years ago?
Right, 1980s.
From a passing gentleman.
Right.
Action barely moved on this plot because it was a plot nobody wanted to go. A location nobody wanted to go because of its surrounding and its challenges around the plot. In a way, a critical piece of infrastructure changed its profile. That would be Eastern Freeway.
Right.
The flourishing of a new business district at Bandapulla complex. So this player, when I look at him, there are three generations working at the same time in the organization. I don't think there's any other company, not just in real estate, but I think outside also, that has managed to do it and do it successfully for a certain amount of time. We don't know what's going to happen 2 years, 3 years down the line. All disputes may arise and complications arise. But at a product level, I think this is a player who now wants to make a mark. It's a player that wants to make buildings that are aspirational. Just does not want to make buildings. So he clearly wants to break out, raise the bar. Wadala, he has a good canvas even left today. For the land parcel that is left, when people say 100 acres he has and he's built almost 3/4, almost 2/3 of it, that still leaves a substantial amount of land bank that is there over there, which can be well utilized. The second part you said is Kanjurmarg. So that's a big land parcel, but there are challenges with that land. At the same time, I recognize that this is a player who has a skill set of taking land and finding a way to get it cleared.
Right.
So not just over here, but there are other occasions where I'm told he's managed to do that successfully. And the history of a player like this is such that in the markets that he's operated in, he's been able to create steady goodwill. Even a market like Kalyan, it's been there for very long. Customers trust it. What was lacking was, I think, a lot of marketing and a degree of awareness. I think marketing, I think it's sort of woken up in the last 2 years. I've noticed that pattern with Ajmera and another Navi Mumbai developer called Arihant, where it was listed but it was sleeping. And now there's been a marked shift in how it wants to be perceived. So I think among the mid-level developers, or the small to mid-level developers, I think Ajmera is one of those that is well positioned over the next 5 to 7 years to gain disproportionate.
Thank you very much for that insightful answer. And as you mentioned about Arihant, so if you can give some insight on that side also, because I think Arihant also I was following. So they have the land, or they are developing the land mostly outskirts of Mumbai, like not very much outskirts, but I think Navi Mumbai and that side. So seems to be an interesting candidate, at least from our investment point of view. The balance sheet looks okay. Management also looks fairly well. And the real insight which I am getting out of this session is your understanding on a ground level, which as an investor we don't have. We just look at the numbers, at the balance sheet, at the profitability level, and we believe the management. But that should not be the actual way of investing, because we also get biased as the picture is painted by the management. So what is your understanding on Arihant's side, if you can give some insight?
So Arihant is a pretty simple entrepreneur. He should have been bigger. In my view, for the time he spent in the market and his delivery track record, he should have been a much bigger player. Now, why he hasn't done that is due to a variety of factors. Like you mentioned, he primarily focused on Navi Mumbai, has some presence in Rajasthan and so on and so forth. I think Arihant has two skill sets that are, in my view, very critical for a developer of his size. One is his ability to source land. He is able to capture land parcels at good locations by dealing with the right set of people and by having strong persuasive skills across many layers, including the eventual landowners. So I think he has that skill set that is very valuable over there. Secondly, he does not think like a small developer. His size is not very big in terms of revenues. Even volumes, I think he does 1,500, 1,600 units in the last year. But he does not think like a small developer. He thinks as a guy who will always have a project next, which is why he's able to move with velocity. When things aren't working, he modifies, he changes things, gets the sale done, moves forward. Otherwise, a trap for most small developers is that they start the project, they think of a certain price in their head, and until it doesn't come to that price or close to their price, they stay on.
Right.
He does not have that package. Things don't work, he modifies, changes plan, sells, gets out. And I think he's a player to watch out for at that scale in that market. He has a sizable market share in Navi Mumbai, has good brand recall, has products across a wide spectrum. So in Navi Mumbai, if I was to refer to him, he would be sort of, in a way, the Maruti. He will have a product for everybody.
Understood.
If you don't meet me here, I'll meet you a bit ahead, 3 kilometers ahead with this product. If you can't meet me there, I'll meet you 3 kilometers ahead over here with this product.
Right.
So yeah, he's I think a player I've been tracking for a while. He seems to be a guy who wants to grow. Should have been bigger. Hopefully, he grows bigger in the next 5 years.
Right. So I have taken you a lot of time. So I will end this with last 2 or 3 questions. There is another listed entity which is Indiabull Real Estate. There has been, at least in the stock market, like there has been a lot of discussion due to the legacy of the Indiabull brand. And then from I think 2020, there has been the merger which is announced and in process. Due to pandemic, it got delayed a bit. I was attending the last con call, last or probably the first one from the Indiabull side. So they had mentioned that almost the merger process is completed, and within next 1 to 1.5 months, the merger will go through with Embassy Group. So I would like to understand your view on both sides, which is what has been the legacy of the Indiabull side over the like last cycle. Probably we can take a reference of 2008-9 cycle, and then till now, what has actually happened. And on a Embassy side, because I was going through their investor presentation, so they had mentioned that they have a lot of land which is not utilized, not able to monetize it. While there is another entity which is Embassy, who have in general good reputation from Bangalore market. So after merger, how you see this entity, not in a very short period of time, but probably in next 5 to 7, 8 years, where they can probably reach?
So I'm aware that Indiabulls is perceived as a brand very negatively by the financial market. I've noticed that they get clubbed with the likes of HDIL and others. I don't mean to sound as if I'm defending Indiabulls, but I don't think they should be put in that league. They have made mistakes. They have certain challenges that are there. Where they currently stand is Central Bombay, where they have a presence, sizable one in terms of value, from Indiabulls Blue, which is now a project that has attracted quite a lot of celebrities and top-end industrialists. Also, the one Sky Forest, which has had a complicated journey, but it now seems to be in its last few miles.
Right.
Besides that, they have land parcels in locations like Thane, Savroli. That's Savroli one is, I think, a project which has been stuck for the longest time. It was a golf city, designed as a golf city. There's not too much of a golf course there. So the plans have clearly changed there. So what Embassy has is an opportunity to enter Bombay in a meaningful manner through them. Is it going to be easy? That's the complicated thing in real estate, is that it's very tough to revive projects that are stuck, or take over a project from a developer who doesn't have the most conducive reputation.
Right.
We saw that even there's one developer, Nirmal, who's had transactions with multiple players after being stuck. We had DB Realty, who had the project which was taken by Rustomji, a luxury project, and it's taken its own journey. And now there is prestige that is coming in Bombay with quite a few projects.
Right.
So Embassy might get an entry into the Mumbai market, but it will not be an easy ride. Partly because Indiabulls has a challenging image and reputation problem at this point of time, and also the fact that Embassy in itself does not have a strong brand in the Mumbai market. So I don't see things moving meaningfully and quickly for Embassy in this regard. Merger might get done, they might take over the projects, but this ecosystem change, like in all mergers, is a long drawn out affair. Over a 5-year period, if they manage to pull it off, it will be one of the few cases where we have seen one developer take up the project of another developer and take it to a different level. It will not be easy, but Embassy is probably one of the few developers from Bangalore who can possibly pull it off.
Right. 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 And connected to this question, so just wanted to understand the player who have some niche into one micro market. Say someone is from the Mumbai, how difficult it is for that player to go out, because I have seen the many cases, say like for example Godrej or like DLF or some other players, even India Bull Real Estate, they have some projects going on into Delhi region and all. So how difficult it is to create your own brand in some other micro markets. So is it a good strategy, or it's better like to be like let's focus only on the niche micro market where they are working from like last 20, 30, 40 years. So how you think about these two situations?
So frankly, developers don't have a choice. If you want scale, now you have to be in different markets. A Mumbai developer being in Mumbai has limited options. And because he has limited options, then he has to be most aggressive in acquiring projects, which often makes the financials go for a toss. So there is no option for builders. They have to go outside. Each one has to at least look at 2 or 3 geographies. Players like Godrej, Tata have a disproportionate advantage there because they are legacy brands.
Right.
But like a Prestige entering into Mumbai, they've had a tough struggle. They have to accept the fact that while they may be a heavyweight in Bangalore, in Mumbai they are a startup. They are new. Similarly, like we were talking about embassy earlier, the same thing. They have to appreciate the fact that we are known in a particular market, we are not known elsewhere. So I think while people may want to be in their own niche, that option is not available to developers who want scale.
Okay.
We might see developers like, say, a Total Environment of Bangalore, who does very specialized products. Very few of them treats it like a piece of art. He can do it, but he'll not get scale. But if you want scale, which the likes of Lodha, Godrej, Tata may want, you have no option but to expand into more than one geography.
Right. My next question is related to commercial real estate. So we have seen the pandemic where we all were working from home, and then I think there has been a complete shift which is happening right now. I was reading Elon Musk letter which he has posted probably like 2 or 3 days before, where he has mentioned that like in a week one should at least work 40 hours in an office. So probably it has understood that the efficiency at working from home is much lesser. So right now, like on a Sunday also, I'm coming at office and I'm taking this. So what is your understanding on this side? Like there has been a shift on a commercial real estate which already started happening, or it just probably a start, or it has not happened yet?
So I think we are still at that stage where hybrid is being opted.
Okay.
With hybrid being opted, then obviously it has an implication for the commercial market, commercial space market. Will that change now? Give the example of Elon Musk. He's in a different industry. He's a rare entrepreneur. I don't think most grade A companies, top end companies who are operating in grade A spaces, they have the workforce that will be easily amenable to doing a regular old pre-2020 type work culture again, at least in the short to medium term future.
Okay.
Maybe after a year or so, when they review productivity and they realize that it's slackened sharply, there may be a change. But at this point of time, I think we are still at that zone where we are hybrid, with exceptional organizations still returning to the full 5-day, 6-day week. At the same time, there are also still many entities that are still doing work from home even after all this COVID is settled.
Right.
So yeah, I think the median is where hybrid is.
Okay. So now my last question. So as I was talking to you, that we follow mostly whatever is reported on the exchanges by the different developers, be it the sales, be it the pre-sales number, and different balance sheets and all. So if one really wanted to do some scuttlebutt or wanted to understand what is actually going on in a sector, like what are the different things you personally follow, where you probably track the sales numbers, or like, because I definitely understand you have been in this industry from long time, you have created your own circles, and we get input from them. But a guy who is looking a real estate sector from a stock market point of view, and he wanted to do some deep dive and really wanted to understand what's actually going on into a ground level, how he can, like, over the period of time, I'm asking, because this won't happen immediately. In probably next 1 or 2 years, he wanted to do some real good understanding about this sector. What should be the start, and what should be the different sources he should follow? Maybe the websites or like different things. If you can give some insights.
So I tell you the things I don't do. Okay, now
Okay.
people have different approaches to do it. One is I don't listen to developers. The databases I follow are licensed for us,
Okay.
and which gives booking numbers through their own survey and on unsold inventory, sales, pricing, as well as agencies like Zapkey and CRE Matrix that collate registration data. Registration data is the be all and end all of real estate in Mumbai. It may not be perfect, but it is as good as we have it over here. The way to judge real estate, in my view, frankly, to get a forward-looking perspective, is to talk to people uh, who are in the ecosystem, uh, or if you're talking to a developer, to talk to somebody who's not who's does not have a script. Because I was reading. I put out a tweet some months back as to one consultant uh, saying in 2016 it is the best time to buy a house in Mumbai.
Okay.
In 2017, 2018, 2019, 2020, 2021, and now 2022. A couple of weeks back, I saw him do the same thing. Now, anyone who would have followed his advice would probably be down 20% in their home purchase in Mumbai for sure.
Okay.
So, consultants we should avoid, because the surveys also that they do, I think I have to be careful since you have a wide viewership on YouTube and the choice of words I use. But I would say that heavily discount what consultants say, and heavily discount what developers say in management calls. Barring that, you'll have to rely on the ecosystem to tell you information. It will not be perfect, but you'll get a better indication as to what is happening than listening to the others.
And one last one connected to this is like how you see the different cycles. Like the major cycle which we all are aware is 2008-9, where there has been a huge sales, because I was tracking some numbers during that period of time. So most of the developers has not touched, at least the smaller ones, those numbers which one time they able to do in this 1 or 2 years. And then there has been like different small cycles which came and go. Last one is probably 2008. There has been that time some good numbers posted by the developers. So how you see the different cycles, and probably where we are now in a Mumbai macro market? Already it has bottomed out, and like we are already in midway, or we are at like picked out, or where you see specifically in a Mumbai market? That would be my last question.
So we have peaked out for sure. Okay. We have also bottomed out for sure. I think we are somewhere in between. You give the example of cycles. Now, I think what's happened in a sector like real estate is that the up cycles get crunched in a very short span of time, but the down cycles linger for long.
Right.
There are multiple reasons for it. The up cycles have often been triggered by exceptional occasions. What happened 14, 15 years back, or what happened 2, 3 years back, where we create an environment where everybody jumps in. We will not get back to those buoyant days in Mumbai, because now one key component in real estate, one key customer base in real estate is vanished. That is the investor base. Earlier, you had multiple avenues, two key avenues where you could make money from to get sales: the end user, the investor. Now the investor is totally gone. Now you have to get to the end user. Now, in an end user, how do you really make sure you increase the pie of end users? You have to go bottom of the pyramid. Bottom of the pyramid is a tough thing to do in a market like Mumbai. So the first home buyer, potential first home buyer market invariably remains a first home buyer, potential first home buyer for a long time. It is the second guy who's typically driving it in Mumbai city.
Right.
Outside of Mumbai, that thing changes sharply, but in Mumbai city, the first home buyer market and the investor market are the two segments that the industry has to try to get. When we start getting that, then we might think of a stage where volumes will, pick up, price action will happen. Until then, I don't see this cycle has peaked out, it has bottomed out. But I think now we will see a phase where we will see steady volumes at the industry level, but we will see many struggling individual projects.
Okay.
So what we see at the top, at the macro and the micro level, there will be quite a bit of divergence in that over the next 3 years.
Right. Understood. So it has been a really very, very great session. I mean, I personally learned a lot from your experience, and specifically on a ground level, what actually happens and how you track different things. And you have definitely developed a lot of understanding by visiting different projects and being into a market. So really, thank you very much for giving us a time and giving your insights to the audience about Mumbai real estate market, macro market, and a general idea about the real estate sector. Thank you very much.
Thank you, Vishal. Thank you. It is nice to speak with you and answer all your queries.
तो यदि आपको भी आपका हाई क्वालिटी स्टॉक्स का पोर्टफोलियो क्रिएट करना है तो आप मेरे मॉडल पोर्टफोलियो जो सर्विस है उसको ज्वाइन कर सकते हो। इसकी जो लिंक है आपको नीचे डिस्क्रिप्शन में मिल जाएगी। तो आपको भी पता चलेगा एग्जैक्टली मैं कौन से जो स्टॉक्स है वो मेरे पोर्टफोलियो में मैंने खरीदे हैं या कौन से स्टॉक्स में मैंने मेरा जो अलोकेशन है वो इंक्रीज किया है या डिक्रीज किया है। ये सारे डिटेल्स जो है वो आपके साथ लाइव शेयर किए जाएंगे। इसके अलावा काफी इंफॉर्मेटिव सेशंस भी मैं आगे जाके प्लान करने वाला हूं, जैसे कि प्राज इंडस्ट्रीज का एक मैं डिटेल वेबिनार प्लान किया है 26 जून यानी जो लास्ट संडे है ये मंथ का। तो मेक श्योर आप भी ये जो वेबिनार है उसको अटेंड कर सकते हो। इसका जो फीस है वो सिर्फ 250 रुपीज है, विच इज वेरी वेरी चीप। और सपोज आपने मॉडल पोर्टफोलियो का ऑलरेडी सब्सक्रिप्शन लिया है तो प्राज इंडस्ट्रीज जैसे जो वेबिनार्स हो गए या इसके अलावा भी काफी वेबिनार्स में आगे जाके प्लान करने वाला हूं और आपके लिए कंप्लीटली फ्री होंगे। तो मेक श्योर यू अटेंड द प्राज इंडस्ट्रीज वेबिनार, या इसके अलावा मेरा जो मॉडल पोर्टफोलियो का सब्सक्रिप्शन है वो भी ले सकते हो। इसमें करंटली मैं 20% का डिस्काउंट दे रहा हूं। तो प्राज इंडस्ट्रीज का जो वेबिनार होगा इट विल बी अ वेरी वेरी डिटेल वेबिनार। मैंने काफी अलग अलग टॉपिक इसमें प्लान किए हैं, स्टार्टिंग फ्रॉम शुगर सेक्टर का आउटलुक क्या है, या इसके अलावा एथेनॉल प्रोडक्शन का जो शिफ्ट हो रहा है, शुगर मिल जो शिफ्ट कर रही है शुगर प्रोडक्शन से एथेनॉल प्रोडक्शन में, उसका क्या अपॉर्चुनिटी प्राज इंडस्ट्रीज के लिए है। इसके अलावा प्राज इंडस्ट्रीज काफी अलग अलग जो टेक्नोलॉजीज है वो प्रोवाइड करता है, जैसे कि 2G प्लांट्स। तो 2G जो प्लांट्स होते हैं वो काफी डिफरेंट होते हैं कंपेयर टू 1G प्लांट। 1G प्लांट्स में जनरली मोलासिस हो गया, या इसके अलावा जो ग्रेन बेस्ड फीड स्टॉक्स होते हैं उससे आप देखोगे तो शुगर बनता है, या इसके अलावा कॉर्न आ जाता है। बट जो 2G फीड स्टॉक्स है जिसको लिग्नोसेल्यूलोजिक फीड स्टॉक कहा जाता है, तो इसमें व्हीट स्ट्रॉ हो गया या राइस स्ट्रॉ हो गया, या इसके अलावा फार्म का जो वेस्ट है उससे 2G जो एथेनॉल है वो मैन्युफैक्चर होता है और यहाँ पे शिफ्ट चल रहा है। तो दिस टॉपिक आई हैव कवर्ड इन वेरी डिटेल। इसके अलावा CBG यानी कंप्रेस बायोगैस क्या है, या बायो बिटुमिन क्या है, या इसके अलावा अलग अलग वो केमिकल्स आगे जाके बायो बेस मैन्युफैक्चर करने वाले हैं। इसके लिए उन्होंने बायो प्रिज्म एक वर्टिकल किया है तो इसके रिलेटेड देखेंगे। या इसके अलावा देयर इज अनदर अपॉर्चुनिटी फॉर प्राज इंडस्ट्रीज विच इज एविएशन जो सेक्टर है, उसमें आज जो फ्यूल यूज होता है दैट इज पेट्रोकेमिकल बेस्ड फ्यूल, तो वो आगे जाके रिप्लेस हो सकता है बायोफ्यूल से, जिसको कहते हैं सैफ यानी सस्टेनेबल एविएशन फ्यूल। तो इसमें भी प्राज इंडस्ट्रीज ने उनका टेक्नोलॉजी डेवलप किया है विच इज ऑलरेडी अप्रूव्ड बाय इंडियन एयरफोर्स। इसके अलावा जो मरीन लाइन में या जो शिप्स है उसमें भी जो करंटली पेट्रोकेमिकल बेस्ड फ्यूल्स होते हैं वो रिप्लेस हो सकते हैं बायोफ्यूल से। तो ऐसे अलग अलग जो टॉपिक्स है मैंने प्लान किए ये वेबिनार के लिए है, जो 26 जून को है 1 o'clock को, एंड इट विल बी वेरी वेरी डिटेल वेबिनार। फीस सिर्फ 250 रुपीज है विच इज लेस देन एनी मूवी टिकट फॉर अ संडे। तो मेक श्योर आप ये जो वेबिनार है उसको अटेंड कीजिए, काफी नॉलेजेबल सेशन होगा। सो लेट्स मीट ऑन द 26 जून एट द वेबिनार ऑन द प्राज इंडस्ट्रीज द बिजनेस विद मल्टीपल ऑप्शनलिटीज। और यदि आपको ये जो डिस्कशन सेशन था विद मिस्टर विशाल भार्गवा वो पसंद आया होगा ऑन रियल एस्टेट सेक्टर, तो जरूर ये वीडियो को लाइक कर दीजिए, मेरे चैनल को सब्सक्राइब कीजिए और बेल आइकन पे क्लिक कीजिए ताकि ऐसे जो वीडियोस है वो आपको आगे जाके भी मिलते रहे। और इसके रिलेटेड आपके कुछ सजेशंस हो गए या कुछ क्वेश्चंस हो गए रियल एस्टेट सेक्टर के, तो जरूर आप मुझे नीचे कमेंट में लिख के बता सकते हो। और ये जो वीडियो है वो जरूर आप आपके फ्रेंड्स के साथ शेयर कीजिए ताकि उनको भी काफी डिटेल में नॉलेज मिल जाएगा।